What's up, guys? I just wanted to do a quick video. I've had a pretty swift move down from the range highs, and just wanted to give you a quick update and see if I can help you out with any trading decisions, or just give you some peace of mind and maybe direction for where this market is headed. Obviously, we know the news story behind the dump is the tariffs, or the response from Canada to the tariffs. However, you could see the warning signs on the chart prior to that. And so I just want to go over a couple of these key levels and just map out kind of where we are with Bitcoin and what the possibilities are for where we could go next. So essentially, on the big time frame, the first thing to understand is that we are in a major uptrend. Okay, clearly from the lows here, we are in an overall uptrend. Okay, so this is the low that would need to be validated for the actual trend to be considered changed. However, there is a lot of room between where we are now and that low, so there is a lot of pain between where we are right here and where we would need to be validated. So I do not trade on a time frame that high, but it's just good to know where you are on the high time frame. So where we are now is essentially on a daily time frame. We can be considered, even on the daily, we can be considered to be in a uptrend, because here's your high here, you had your pullback down into here, and now you put in a slightly higher high. Now that's a very bearish high because we did not close this candle right here above it. It just became a wick. However, you still count that as your pivot point, and so potentially you can see a move down all the way to here and still be maintaining this as your higher low, and then you could look for a move back to the upside and put in a higher high. So your trend is your friend to the end, and as of right now, we're in an uptrend on the weekly and the daily. However, looking at it from a different perspective, we are technically just range bound, and this is clearly defined by your range value area. Let me hide some of this stuff, and let's see if I can see. Okay, here we go. So you can clearly see your range value area high, the blue line here at the top, your point of control here at the middle of the range, and then your value area low. So you are technically range bound right now. So they can play around in this range for quite some time, just like they did back here in this range. This one was a bit more of a downtrending range, and this one is kind of like an uptrend. So this is a much more bullish range, I guess you could say. So yeah, looking at it like that, we are kind of range bound. Now, there's two options, or there's about three options that can happen from this point forward in the short to medium term. So we can technically get the bounce, like I said, from down and we'll take a zoomed in look at these key levels I have here so you can understand what these are. But you can get to move down into these regions and then the move up for the higher high. Okay, that's option one. The second option is just like you had this range here all around here, and you swept the lows, you came back to the top of the range, you swept the lows, came back to the top of the range. That could happen again. We could come sweep these lows, we could come tap some of these key levels like this one, or even down here, move back up, reclaim the range, come back to the top of the range. and we can keep doing that for, you know, another few months. I mean, because we traded in that other range for, I think, about 6 months. So there's nothing to say we can't do that. Okay, the third option is that we actually start breaking down this range, trading below it, and trending downward. And then we could finally come to some of these key levels we have, because we've never back tested this high here. We've never back tested this range. We just kind of expanded straight from it pretty swiftly and created a lot of inefficiency. Hence all these purple rectangles here are your order blocks. And so, you know, you have a couple of naked daily points of control here. You have somewhat of a trend line from last cycle's all-time highs. You can connect that running through there. You have that. You have the 50-week EMA, which I've got here with a parallel channel here, which I can throw on here for you just so you can see that. Yeah, you can see your green moving average here. That's your 50-week EMA. And so you can kind of see the option where I just drew out would be perfectly where I would really look to be getting into a long, like a big, you know, big position on a long here. That would be ideal. And you have a lot of confluence there in that region. You also have your Fibonacci golden pocket from the low all the way to the high here. Let me make sure that's still precise. Yeah, so I got that going to the high up here. So there's your Fibonacci golden pocket, 618. I mean, so you can even, once you, if we came here, you know, you could kind of do a wick to there and go, you know. So that's just kind of a couple of options there. But that, you know, could take quite some time to play out. I mean, technically, I think, to be honest with you, what I'm looking for right now is, if we zoom in a little bit on like the 4-hour time frame here, you can see what I have here. I have an order block right here. I have a 1-hour order block, and you have some liquidity sitting right here beneath this wick. You also have kind of a funky little trend line connecting these lows here that you would kind of pop into. I don't really trade trend lines a lot. I would be more interested in, because this is a very inefficient candle here, just a huge fair value gap, which if I turn on my indicator, let's find it. Actually, I don't need the indicator, but it's kind of cool to have on here because it just does a little of the work for you. Let's see. Well, where did it go? Let's see where okay, it jumped down there on me. So let's see. I don't even know how that happened. But either way, so yeah, you can see the inefficiency right here. This fair value gap, the gray box, this indicator is great. Fair value gap, Spaceman, BTC. And that kind of just fills in that fair value gap for you. So I would definitely like to see that get filled some, or at least tap. And that's like the biggest setup I'm looking for right now, is right into that fair value gap, because right inside that fair value gap you have the 786 Fibonacci from this low to the all-time high we put in. So you have the 786. You also have a weekly level right below, the weekly is above. We have a monthly level there right here, and then you also have the macro value area low of this whole range. So this whole green box area right here is definitely a place I'm looking to long, and that would be the first area of interest. If we start losing that, I mean, you can bounce from here, and ideally, you know, you usually don't technically hold a value area. You kind of, it just shows the area outside of which is over or undervalued. So technically it would actually be more ideal to lose this level and bounce here from this, which I have an order block here, And you have a naked daily point of control down here as well. And that's the 886 Fibonacci that we have here as well. So those are kind of my trade ideas. That's our setup. So I mean, if you're in anything, obviously right now it's a little too late to be closing positions out. If anything, I would start adding or nibbling away and try and bring my cost basis down. I know that's probably hard to do when you're probably already all in, but if it's possible, you definitely want to try to, add in these regions. And then that way, if you get a bounce and say, for instance, it's not going to go put in a new high and it rejects from here and comes lower, well, you would be able to get out up here with less of a loss if you're adding in this region. So I think that the bottom's probably not going to be built in tonight, even after Asia opens, because the traditional markets, the U.S. stock market is going to have to, we're going to have to see how they react to the news and let them digest that, and then Bitcoin will take its lead from those markets. If you zoom in a little bit more to like the 1 hour time frame, you can clearly see we are in a very efficient downtrend. Very, very nice clean downtrend with lower lows and lower highs. And I've got that marked out with the gray boxes, each of my range-based demand areas, my supply chain. So I like to keep a track of those, and once we hit some of these key levels and you start seeing price kind of negate some of these supply zones, or at least the first supply zone, then you can actually look to go long. If you're more of a conservative entry type person, I am more aggressive and I like to get in at the level, as long as I'm seeing bull divs on my indicator, my oscillator. So looking at the oscillator, it was bearish for the last several weeks. You've seen money flow coming out here on the oscillator, the green cloud here, that green cloud right here. You've seen money flow coming out. You also saw, as we put in higher high here, you've seen lower lows on your oscillator creating bearish divergences. And so that was kind of why I was leaning more bearish last couple of weeks or so. I did take a short from up here at the local value area high of this range. I did get stopped out with a winning trade when it had to move up on Friday, and unfortunately I missed the re-entry, and that's where we had a sharp move down from. But if we look at a 4 hour oscillator here, you can see for now we're doing a lower low here on price and slightly higher high here on the oscillator, so potentially some bull divs forming, but it's not looking amazing. Go down to the 24 minute, and I mean, you can see we're getting a reaction off of this out of these areas here, and you can kind of see a little bit of bullish divergences forming here. You got a lower low here, 24 minute higher high, so you got some bullish divergences forming. If you drop down to the 12 minute, I'm sure we got some here. Yeah, so you got money flow is creeping up here, and you have a higher low on your oscillator, lower low here, so you do have bullish divergences. So I wouldn't be surprised if we got to move up from here and back tested that value area high before further downside. It just depends on what Asia does when the market opens here in actually just a few minutes. So they could probably run all this liquidity and pop back up here. But yeah, those are the options. That's kind of what I'm looking at. Definitely don't want to get overly bearish at the bottom, and you don't want to be overly bullish at the top. Just keep a cool head. Do your TA, wait on your levels, use risk management, and you'll be all right. And if you're not there yet, keep learning, keep applying yourself, and you'll get there.